Good evening, everyone, and welcome to this week's special presentation entitled Navigating an Overextended Market. My name is Glenn Tompkins, Senior Stock Market Strategist for VectorVest, and it's my pleasure to give your presentation this week. So with that being said, we know there's a lot of things going on in the market. The Fed has said that they stopped raising interest rates, which was great in and of itself for the market, and then stated that we should be on the lookout for 3 rate cuts for next year, and the market just went bananas. So as we start off here, the Fed has called for 3 rate cuts next year, which is going to be huge to push the market higher. Inflation is coming down. That's the reason why he's going to do this. And the job market is resilient. People are still spending money. You put all of these things together. If people are spending money, hopefully they're putting money back into the market. Inflation coming down. People won't feel the pinch nearly as much. That's another story for another time. But, it is coming down. But the big news is the 3 rate cuts for next year. People are jumping all over that, pushing the market higher. With that happening, and we know that our MTI, following up from last week's presentation from Jim Penna, the MTI is definitely at a level where the market is starting to look for a top. So we're in an overextended market. You're probably still holding stocks. And these are the questions that are coming up. How do I manage my stocks? Should I buy more? Should I close everything? And when you hear that the market is getting toppy, that we could pull back, people panic. I don't want you to panic. I just want you to understand what's going on. And with practical application going on as it's moving right now, to take the right actions. Or here's another one. I'm down so much. Should I sell now? I've got a lot of people on YouTube who send me these questions time and time again, especially the last one. I'm down so much. Should I sell now? I'm always going to tell you that when you get into a position, you should already know when you're going to pull the trigger to exit that position. You should know that before you buy into it. Well, with that being said, now, what do you do with that going forward? So we're going to talk about that. So some tactics that you can consider. Tighten stops. Folks, that is so important. And I've had the question asked, what do you mean by tighten stops? Well, if you're using gain-loss percentage, let's say if the stock goes up 28%, you're not going to be greedy, you're going to take the profit. Or if the stock goes against me 7%, I'm going to mitigate the loss and get out. Tightening stops means bring that level of the high down. Maybe I go to a 20% gain, maybe I get out of them faster, and maybe I go to a 5% loss. That's tightening the stop, not giving it such a wide range. How else can you tighten stops? Well, let's say you're using a trailing stop of 10 or 15%. Have it. So, trailing stop of 10%, make it a trailing stop of 5%. Trailing stop of 15%, let's make it about a 7-8% trailing stop. That's what tightening stops means. It means that you will take your gains a little quicker, but you will also get out of your losses a little quicker as well. This is something that you've heard all of us say, never lose more than half of what you've made. Now, I've heard people say, well, what if I'm down? Well, I'm going to address that in this video as well. But overall, if you're up double digits in any stock, you should never lose more than half of what you made. If I'm up 20%, I should not give back more than 10%. If I'm up 30%, I should not give back more than 15%. It's really straightforward. That gives you the opportunity to take a profit off the table. And guess what? You can't go broke taking a profit. People are asking me, well, I still want to go buy more stocks. I don't know when this market's going to turn around or if it's going to turn around. Well, yeah, it's going to turn around. But when? I don't know. Todd Schaefer and I had a conversation about after a market tops. He did some research on how quickly the market returns or starts to pull back. Somewhere in between 2 and 10 or 2 and 14 days. I have to get with him on that. But it was some semblance of once a market finds a top, it will turn over. And keep in mind, the higher it is above the value of looking for a top it is, the faster, like a rubber band, it's going to pull back to the mean. All right, so never lose more than half of what you made. If you want to buy more stocks, some of y'all are greedy. If you want to buy more stocks, use less capital. That puts less risk at risk. You put less at risk. Folks, this is also key. Use a stock graph. Why? Because a picture is worth 1,000 words. You want to see what you need to see on a graph to help you make a decision on what to do. Use some technical analysis for your stops. So as I go through some of these tactics, you can find a lot of these different tactics in our coaching groups. I just want to put that out there. All right. Play some options. That comes from Ron Wheeler and from Jim Penna. Buy a put, sell a covered call. And always remember this, and I think a lot of you lose sight of this. VectorVest gives you a stop price on every stock in the database. If you don't want to look at anything that I've just talked about right here, the simple way to go is just to go look at this VectorVest stop price. We're talking about looking at a stop price. That's part of what Todd Schaefer does, but let's get into the software. From the home page, we're going to go straight to a market timing graph. So from the market timing graph, I wanted to see from the standpoint of the last GLB RT kicker. When was that last call? That last call was on 11/13 of 2023. Well, why am I doing that? Well, just hold your horses a little bit and don't steal my thunder. I got you. All right. So the reason why I'm looking at that is that was the first green light buyer RT kicker call after the confirmed down call. This is a time when many of you would have bought stocks, right? So from that perspective, let's go to the viewers tab. I'm going to take the stock viewer back to the green light buyer RT kicker call up. These were the top 10 stocks in the database. Let's say you love that timing signal so much you just went and bought the top 10 stocks. Let's see what they did up until right now. We'll do a quick test of all. Wow, 5.68%. 9 out of the 10 stocks made gains. That's not half bad. How about that? The power of VST. The top VST stocks in the database when we got the new green light buy RT kicker. I don't know how many of you were able to easily do that. This was easy. Just look at the top VST stocks. One of them got hit, down 15%. Overall, we made 5.68%. We didn't outperform the market, but I don't know how many of you would be angry with being up 5.68% in the current market's condition, less than a month, or right about at a month. That's not half bad. Annualized out to 64%. All right, so that was then. Let's talk about now. Let's take those same stocks. All right, let's take those same stocks. I want to keep this date because I want to keep these stocks, right? Let's keep and look at these stocks on a graph, because now the graph is going to take me up until right now, right here, right now, as of December 15th. So if I would have changed the date, I could have changed the stocks. I wanted to stick with the same stocks that we would have gotten back on 11/13, put these on a 6-month graph. So why do I talk about the stop price? Because I'm looking at the VectorVest simple layout. Let's go to graph layouts. I'm looking at the VectorVest layout. The VectorVest layout uses a stop price. Remember, every stock in our database gets a stop. And there it is. All right. Once a stock's price goes below it, simply you sell it. Look at this stock that's running since that time period. Actually, let's go put this on a 1-month graph. Since that 1-month time period, earnings per share looks good. The stock still has a buy recommendation. What do? Well, notice that today we hit a new 1-month high. What can I see from this as managing the stocks right now if the stop hasn't gotten me out? How about use some technical analysis? Let's go draw a line. Let's go draw a horizontal line at the most recent swing high based upon where we are right now. Folks, that is a beautiful line of support sitting at $26.18. Do you not think that that's a good opportunity to take some off the table? Better yet, right now, knowing that the market has got a high level of MTI, market pulling back today, moving sideways, maybe I take half off the table right now. And then if the market continues to rise, I'm still in half. But if it falls below this line in the sand, I'm out. Let's go to the next one. This is also a buy recommendation. Pull back. Notice that the stop price still didn't get you out, and you're still reaping the rewards from it. Nice rebound. Earnings still looks good. RT still looks good. What do? Well, at some point in time, you got to make a decision on what you want to do to get out. From this point, if you hadn't gotten out because of the stop price, how about another technical indicator. Why not look for the prior low, the prior day's low? Noticing the stock's price is not hitting prior day's low, but here it did. If you could have saw a little bit of a gravestone doji right here, the stock's price traded below the low. Boom, you could have gotten out. But where was the MTI then? The MTI wasn't at the levels that it is right now. So I'm looking at that rationale based on the current level of the MTI, looking at the prior day's close. Let's go to the next one. Next one is Decker, one of the best stocks in our database. It did trade lower than the prior day's low here yesterday. Today, a little bit of indecision, but beautiful equity curve just going up, 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 up. Yesterday would have been a good day to take half off the table, all right, and let the other half ride. But you can't go broke taking a profit. Everything else still looks good about it. Wow, ACGL, that was the stock that went down the most, right? Now, based upon what I see right now, you say, well, I'm down 15%. What do I do? Well, you got to make a decision. How much hurt are you willing to take? It is down 15% from the time you got it. In my mind, in my thinking, you might want to think about pulling the trigger and getting out of that stock now. And it is below the stop price. It's a sell recommendation. All right, let's go to the next stock. Fix. One day doesn't make a trend. A little bit of a doji going on right here. And look at today's action. It's not below the prior day's low. And that's something that Jerry D'Ambrosio uses in his swing trading. But still, nonetheless, stop price, still good. Nothing there. I can also still draw a horizontal line at the most recent level of a swing high. That's another line in the sand at $200.43. Folks, doing this kind of exercise will answer your questions about what you need to do. Now, this one here, a little bit of a sideways move, actually. What do? Well, it's not below the prior day's low. It was below the prior day's low here. It was below the prior day's low here. Either one of these days would have been a good time to get out of it. If you're still in it right now, let me draw you a little level of support, sitting about 85.33. That's a good level of support given what's going on from this high. That could be your line in the sand, followed up by the stop price that you see. NVIDIA, never got a sell recommendation. But again, MTI wasn't at the level of looking for a top back here. It is now. So what do? On this one, I like looking at the prior day's close. Or remember, if I have trailing stops or gain losses, I told you what to do with those. Tighten those and go by those those stops as well. All right, let's go to the next one. EDU, trading below the low, Still not a sell recommendation. Didn't fall through the level of the stop. But looking at some, look at that. How about this? Bearish Harami, followed through. Boom, out. Or trading below the low, the prior day's low. Boom, out. Whether it's half or all, that's what you're looking for. Next one, FCNA. I don't like the earnings per share, but I'm looking at right now, today it's trading lower than the prior low. I think I would think about taking half off the table, if not all, because the stock is not actually trending up. It's moving sideways, slightly down. Why not take that off the table? And the last one, LRN, again, slightly up, a lot more sideways, not lower than the prior day's low, and still above the stop. I would then look at the most recent swing high back here. Bingo. Wow, look at that. Looking at the I love support and resistance. Looking at yesterday's candle, the wick went right to the prior swing high. Still, we're trading above it. This is my line in the sand, $59.03. Folks, this video, this special presentation was built and designed around answering your questions and putting these things into practical application right now. Many of your stocks look like these stocks. Hopefully, the tactics that I've given you, the insight that I've given you, have given you a better perspective on how to manage your trades. And let me go back to, remember I told you never give back more than half of what you've made? Let's quick test these again. If I'm down that much, I should have already had some stops. Hopefully what I've given to you would have gotten you out earlier. But how about some of these stocks that are only up 0.75% or 1%? This is where not giving back more than half doesn't make sense, but use some semblance of trading. If the stock is trading lower than the prior day's low, will get you out of the stock and capture profit. Folks, I hope that you enjoyed this video and giving you some insight on what to do. Folks, until the next time, see ya.